Hey everyone, want to start off the week here by looking at the NASDAQ 100, or particularly the technology sector of the S&P 500 as it relates to the broader market, the S&P 500 large cap equity index. We've seen some weakness, and I think this following chart is going to really put things into perspective in terms of how far things have come and maybe why there's some consolidation in order for mega cap growth. I'm going to show you this chart here right now on a longer term basis, and then we're going to pull up something at the bottom there that I think is going to give you a bit more perspective still. What we're looking at here is a weekly chart. We could even make this a monthly chart because it goes all the way back to the year 2000. And what this is a ratio chart, and I do a lot of ratio charts because it's always really important to know how things are stacking up relatively to other parts of the market. And what you can see is that the technology sector, so the XLK ETF actually, which is the ETF that represents the tech sector of the S&P 500, in relative terms, it reached just a few weeks ago, and before then actually earlier this year when I pointed it out for the first time, but then we had another little burst. We've now reached basically the relative strength level of where the technology sector was trading basically right at the internet bubble peak. Like in March 2000, I remember that time very well. It's when I had just graduated from college a few months prior, was trying to go work on Wall Street, then they rescinded a bunch of offers. So I didn't get to work at my number one choice investment bank just yet. That ultimately, luckily, transpired later. But what's important is that extreme ratio that we had at the time, we once again are reaching it now. And so from that perspective, this is not to say that these mega cap tech stocks are going to fall apart. I really don't think that's going to happen. Of course, that's always relative. What does that mean, falling apart? However, I think there's consolidation here in order. And if you look at this through the lens of momentum, what does that really mean? Well, you look at the relative strength index, and I'm purposely using an indicator that everyone should have access to. Relative strength obviously peaked back in the year 2000, just as it peaked here, actually at this point quite a while ago, and it's making lower highs. But I think where people start to get a bit antsy to start buying again is when they start seeing these relative strength indices go lower again. But notice that the relative strength index in January 2001, so well after this ratio peaked, had bottomed. But the market, the relative chart, the relative weakness of tech continued for like another year and a half or something like that, so or even more. So I would be very careful here when something reaches these extremities of relative strength. I'd be careful to use something like a relative strength index, because it can mean we're a lot more. Now, I don't necessarily think we're going to see as severe an underperformance that we saw back in the year 2000, but I think it's going to be some sort of consolidation period. So basically the call will be to rotate out or reduce positions in mega cap tech stocks. We've been talking about this now for months and months, nothing new. But also, I should say, what this brings about is opportunity. And it brings about opportunity to start looking for parts of the market that get extremely overbought and oversold, where we can generate and put on income trades. And that's the topic this week for our research call. I'd love to show you exactly one of the ways that we like to generate income, put on trades for income. And you can find out all about that in this week's presentation. You can sign up for that down below or on the next screen. Bring a pen and a piece of paper